A good thing happened to the American stock market last Monday. American election is over, and it became clear that Joe Biden won the presidency. Suddenly, Pfizer, an American company, in conjunction with their German partner BioNTech, said their COVID-19 vaccine may be a remarkable 90% effective. Next month, they will contact the regulatory authorities and ask to endorse it. The final tests was successfully completed. Dr. Fauci, one of the most leading experts of infectious diseases, said, if vaccines have at least an efficacy of 60%, it will be acceptable, but an efficacy other 90% is frankly extraordinary. Russian developers also said that their vaccine is as effective as the Americans. However, this still hasn't reached the third stage of the tests. As a result, the vaccine from Pfizer and Biontech has a huge chance to spread in early 2021. Pfizer also said it will be ready to produce 1.3 billion doses by the end of 2021. With this news, we are seeing sharp market growth. However, the shares of those companies that have been most affected by the coronavirus have soared the most. For example, cruise operators. Royal Caribbean grow by 27%, Carnival grow by 29%. The same situation is observed with shares of casino operators and air carriers. The actions of cinemas are the most surprising. For example, the cinema company rose by 45%. AMC Entertainment Holding is the world's largest cinema operators, whose shares soared by 51% per day. This is fantastic. They can notice that not the entire market is growing. Those assets that performed a protective function during the crisis, such as big tech, are being adjusted. This is because there was a low tide from the assets that they considered protective to the claim assets from the affected sectors of the economy. Oil rose by more than 9% in 3 days and now stands at $42 per barrel. OPEC Plus and Saudi Arabia also said earlier that restrictions on oil production could be extended. OPEC will not change the terms of the deal, which essentially set the oil market in spring of 2020. After these words, they should discuss the risks that exist now. Donald Trump strongly disagrees with the results and plans to challenge them in court. So far, his chances of success are rather slim. In addition, rumors have it that his wife now going to divorce him. It seems to me that this is very sad, because Melania Trump is leading the media watch and will not please the eyes of many fans. Going back to the markets, you should understand the following. As we can see, the blue wave didn't happen. Democrat becomes president, while the Senate remains under the power of the Republicans. At this stage, this split is positive for the market. Everybody hopes that the Senate will not let Biden implement the reforms he intended to do. These reforms will also help him finance his election promises. For example, it will be difficult for Biden to cancel the tax benefits introduced by Donald Trump, to raise corporate taxes, to raise taxes for individuals, and so on, at least for the next 2 years. In addition, this political impasse worsens the chance for tougher requirements for the large technology, medical, banking, and energy companies. It will be more difficult for Biden to implement his pre-election threats. Biden is expected to have tougher foreign policy and end the conflict with China. On January 6, there will be a meeting of both chambers of the Congress. During this meeting, lawmakers will officially confirm the voting results of elections. In general, Trump has a couple more weeks. As an investor, I rejoice at the green figures in my stock portfolios that I'm seeing today. However, today's euphoria is quite volatile and it's very dangerous to give in to joy. You have to be more careful. I see many risks that may come true in the weeks and months ahead. What kind of risks are these? First, the Senate doesn't necessarily approve of Biden's reforms. It could be a big disappointment and could trigger a sale. Secondly, Biden will raise taxes, and this discussion will not create a positive background in the markets. In addition, coronavirus. The situation is very difficult. It's possible that Biden will speak out for tougher restrictions. They understand that the production of the vaccine may slow down or side effects may occur. These moments can ruin the picture. We also can't rule out a wave of bankruptcies in the near future. Without sufficient financial support, this sudden rise in markets can be fragile. Be cautious if you are not prepared to take risks. There is an interesting article from JP Morgan. Analysts of the American bank believe that large investors have found an alternative to gold, and it's Bitcoin. They are talking not only about private investors, but also about large funds. In October, cash inflows to Bitcoin Trust Grayscale increased dramatically. There is an outflow of investors from gold funds. The bank believes that these are correlated events. Grayscale Bitcoin Trust, ticker GBTC, is an investment tool that allows access to Bitcoin in the form of a security. The size of the Bitcoin Trust is quite large, almost $7.5 billion. One share is worth less than $20. Over the past month, their shares have increased by 1.5 times. This may be due to the interest of institutional investors. Bitcoin is believed to have the potential for long-term growth if it competes more intensively with gold as an alternative. However, it should be borne in mind that the market capitalization of Bitcoin will have to grow by a factor of 10 to match the total private sector investment in gold through ETFs or in GETs and coins, said JP Morgan. In the end, I would like to say that investment is a good tool, but you have to be more careful. Click the like button and subscribe to my channel. See you later.